I think the market in parts will accelerate. We need to build resilience. I think that perma-crisis theme is just going to stay with us. We have to adapt. I'm very excited with the conversations we've had with investors over the last, call it 6 months. The tide has turned. It's now execution time.
After years of volatility, real asset investment is gaining upward momentum. Capital is moving again, but the path to linear growth remains bumpy. So what investment strategy should be deployed in 2026? I'm Andrew Belt, and in this episode of the Patcast, I'm joined by PATRIZIA's co-heads of fund management, Mahdi Mokrane for real estate, and Graham Matthews for infrastructure. Together, we will look back at 2025 and look ahead to 2026 and what it may offer. At the start of 2025, we referred to the start of a promising new cycle. So 12 months on, did that actually happen? And what are your key takeaways from 2025?
I think we were spot on when we said the market would begin to recover. We've seen this in our investment performance. We've seen this in the indices that represent our industry, in particular in Europe. So for example, in an overall, the market returned 5%. So after returning 2 years of negative performance, the bounce back happened. It didn't happen in the quantum you would expect in a post-GFC world, for example, but it's still pretty solid. But it's bifurcated between, say, residential, where we had 8% bounce back, and say offices, which was still more or less around the 0% mark in terms of total returns. What has changed is the geopolitical uncertainty that is probably holding a number of investment decisions back. And thirdly, I'd say the other asset classes, which typically real estate is compared against, say the liquids, equities, bonds, and infrastructure, and Graham will elaborate on this, have actually performed pretty well. And anything you would actually put into real estate, you'd actually have to arbitrage with versus the other asset classes. But we can come back to that in a minute.
And Graham, what would you add?
And I think from an infrastructure perspective, Andrew, I think 2025 did show that we're at the start of a promising new cycle. We're in that. But I think for slightly different reasons, right? So infrastructure investment returns weren't really buffeted to the same extent, either on the upswing or the subsequent correction. So if you look at overall market returns in infrastructure over sort of 1, 3, 5, and 10 years, they're all sitting above 10%. And so we didn't have that sort of impact. But what I think is now very clear, based on what we've seen over the past year, is that investors, governments recognise that there's a very real need for renewal of the built environment. And that's what's really driving interest in infrastructure now.
So at PATRIZIA, we have the 4 dual megatrends: digitalisation, urbanisation, energy transition, and modern living. So looking back at 2025, were there any investments which really showed the strength of this investment thesis?
We put money to work in developing affordable housing, and with our impact fund, there's been a very successful investment program. It has a dual return, a financial return, and an impact return, which probably caters more to the social, to the affordability, to the accessibility of residential, and this is across Europe. In addition to this, we continued investing in core. We even raised capital in core in a very difficult capital raising environment, and that's really satisfying to actually put capital to work to address the housing needs of many countries around the world, and in particular here in Europe. And then lastly, we see probably terms of trade unseen since the GFC. That's 15, 16 years ago, in terms of securing development programs with our partners and the developers, in which we can actually secure and hedge against some of the risks around the capital expenditures to develop a new asset, against the financing. And we also can establish preferred returns with our partners so that we can de-risk a number of these parameters. So I think from core all the way to value add investing and impact, we see opportunities across the board. And this is the theme around living. And you mentioned, the L in dual, but the underpinning also across all these strategies is that digital transition. That transition is happening across the board. And we're using to design strategies and to also underwrite our transactions using digitalisation and data.
And Graham, how do you see it? And which investments, when you think back to 2025, most represent?
I think it's really interesting, Andrew, because all of the investing that we're doing is aligned with those four megatrends. And if you look at some of the investing that we've been doing in APAC, for example, in 2025, investing in sort of commercial and industrial solar PV platforms, investing in cooling as a service. And if I was to highlight one investment in Europe, I think it would probably be the acquisition towards the end of 2025 of Linear Energy in Norway. And that's a really interesting business. That's a business that provides district heating in the city of Trondheim in Norway. So it's an asset that provides heating to schools, to hospitals, to apartment buildings, and uses as a source of that energy waste from the local community, from households and businesses in that community. So we really like that business because it actually aligns with three of those megatrends around energy transition, around urbanisation, and around modern living.
And also feeding into the circular economy, as you say, taking waste, which otherwise doesn't have that purpose, and using it for good with the energy transition.
And not just using it for good, but otherwise that waste ends up in landfill, which then produces methane, which is a very potent global warming gas. So there's lots of benefits from that investment.
Maybe one thing I could add is if you look now I focus on the living, but if you look at the other property types in the commercial space, so take logistics, for example. It has the benefit of mainly having flat roofs. So it's easy to actually, populate these flat roofs with solar panels.
Yeah.
So you're actually catering exactly to this energy transition. I think as you also move into residential, one of the key goals we're trying to achieve is to actually transition on the energy consumption on the communal space, but also encourage our tenants to change the energy mix that they're using. We're also putting, something we've borrowed from infrastructure, which is sensors in our buildings to actually optimize the energy consumption. So all of these worked in tandem. And another example of what we would call the more re-infra, which is probably approaching our retail tenants, which have parkings in open space, and offering the ability to install energy suppliers, charging pods for electric vehicles or hybrid vehicles. This comes as real estate as a service.
Yeah, and I think that's a really interesting trend, isn't it, Marty, in that sort of re-infra space, where we can think about things like logistics, as you were mentioning, right? Big flat roofs, you can put solar PV, you can then use the energy from the solar PV for electric vehicle charging and just add additional services that adds to the value of the real estate and to the value of the infrastructure.
Yeah. And just a recent anecdote. So we were particularly proud of having been able to deliver outsized returns by adding power to sites and, delivering outstanding performance. But then when we continued approaching tenants, logistics operators, what we call 3PLs, 4PLs, we discovered that, of course, putting power for data centers on otherwise industrial sites is an incredibly interesting strategy. But probably the more important and scalable strategy is actually to build power that can actually service electric fleets. So a number of our 3PLs are not asking for the top energy supply of those pieces of land, but actually in the intermediate to be able to use the traditional operations with electricity, but also powering their electric fleets, particularly on urban logistics.
Some great examples of the convergence of real estate and infrastructure, as you refer to re-infra, as we call it here at PATRIZIA. And of course, this world is rapidly changing. We refer to it here again as world in transition, and Mahdi, you've referred to it as permacrisis as well, with so many different things happening. You only have to look at the news every day to see things are changing. So based on that, how do the dual megatrends stick for investors, and will there be a time in the future where you think we might actually change our investment strategy?
They're here to stay. They're transitions. You may have hiccups. Things may have changed, or you could be surprised. But look, the digitalisation and how we use the data that we had. 20 years ago, everyone in real estate was probably holding their cards close to their chests in terms of transaction information. Now it's out there. 20 years ago, 15 years ago, you didn't have any data on the urban fabric, or it was extremely difficult to collate. Now it's out there. It's more how you use it rather than how you can acquire it. All those changes to support, if you look at offices today, two key features are really attractive to tenants. Outside space, that's probably a trend in COVID-related acceleration. But the other thing is apps, to be able to control my environment, to be able to control my space, and to be in full digitalized world in using your space. Same thing, we just discussed logistics. Residential, we engage with our tenants with apps, and now we want a voice only, so our tenants don't have to type in. Not everyone has that super ability, etc. So all of these changes they're just going to happen. The speed and where they actually end up creating value, that's for us to actually map out. The dual megatrends are a great framework, and they help us navigate this huge period of uncertainty.
Yeah, and look, completely agree with that. The way I look at the dual megatrends is a bit of an insurance policy against the volatility, political volatility, economic volatility in the world, because economies will go up and down. We will have politicians doing crazy things. But those 4 megatrends will be there for years and decades to come, and they're the things that will really drive investment returns.
And moving on to 2026 now, with investment portfolios, how far do you see any changes for real estate and infrastructure, either going up or going down?
Well, I think from an infrastructure perspective, infrastructure is a relatively young asset class, right? So in terms of investment portfolios, it's been around for 30 years, but that's still relatively young. So one of the things we're definitely seeing, both within the group of PATRIZIA existing clients, but also globally, is increasing allocations to infrastructure. Infrastructure has proven itself as an asset class. We've been through the economic upheaval and crises, the perma-crises over the past decade, and infrastructure's consistently produced stable long-term returns. And that's why we're seeing investors increasing their allocations to infrastructure.
If I could add just briefly to this, I think very recently INREV, which is the investors in non-listed real estate vehicles, just published their investor intentions just a few days ago. And it's really fascinating. And you could really see where investors are looking to actually allocate capital. Whether it effectively happen, we'll see. But our conversations with investors look at real estate as having repriced. This is what we said a year ago. And now we're just beginning to see that upward trending cycle. And also looking for predictable, stable cash flows. Some sectors have secular demand-supply imbalances. Living is one example. Recently, The Economist published a front page on the global living crisis. We have been in operations in living for 42 years, as a firm. We create spaces for people to live in different shapes and forms. Population has changed, demographic profiles have evolved, population is aging. We cater to those needs in different cities, and we have a top-down and bottom-up approach to this. So this is one mega trend, mega theme. The other one is what happens with offices. Offices have been challenged during COVID. We see that AI is having an impact on the job market and the occupational needs of office spaces. We have a strategy around the key cities and key micro locations where we think it's worthwhile to refurbish and reposition an asset. We have 6 such assets around Europe being refurbished. And then you have logistics. Resilience of supply chain, particularly with what happened during COVID, is forcing industrial companies, suppliers of services of supply chain, to actually readjust for resilience. We call it the just in case as opposed to the just in time. And then you have the retail, which actually had its own sort of resetting of valuations back in the mid-2000s, and now is offering a pretty attractive yield. So all of these offer opportunities for investors. But I would still say that the investors today look at residential and logistics as being their top, destination for capital.
And with those sectors in mind, there may be an increase in the allocation of portfolios potentially this year. I mean, it very much follows into my next question, which is about where do you see those value creation opportunities in 2026?
It's interesting because typically, if you look at a traditional sort of property cycle or real estate cycle, and you look back, because we do have data going back to the early 70s, and particularly in the UK or the US, and then other markets have actually produced very interesting data points that you can actually rely on. And typically you'd have a return first of, opportunistic, value add, and then core money comes in, and then, a correction, and it goes exactly the mirror way. If you look at what happened, this perma-crisis, the sources of crises and market corrections have in many ways nothing to do with the real estate in particular. So the recovery can actually be much more complex than we would otherwise think. So today we see opportunities in core living, and we've actually invested in Germany, in Italy, in the UK, in that space, in impact and in traditional sort of real estate investments. We also equally see opportunities in the office repositioning. We also see opportunities in logistics expansion and what we call the bolt-on additions, thanks to infrastructure ideas, energy, solar, mobility. All these opportunities, they're in some ways, to some extent, sector, property type agnostic, but the geographies probably starts off with the UK, where the correction has happened first, and the bounce back is actually more prominent and visible. Parts of Northern Europe, and we're seeing this sort of rotate into Germany and France and the Southern Europe at a later stage. So that's sort of the way I would depict the playbook of deploying capital in core and value add.
Yeah, and in the infrastructure space, at PATRIZIA, we are mid-market specialists, right? So value creation comes from the type of investing that we're doing. We have a value creation playbook that we apply to every investment that we make, where we're looking to take controlling stakes, make operational improvements, put in institutional factors that add value, grow platforms. So no matter what sector we're investing in, we always have that same playbook, and that is a core plus value add approach to investing in infrastructure. But I think if there's two areas that I think I'm most excited about for 2026, one is our continued focus on energy transition. So obviously, the world still has the imperative to move increasingly towards a low carbon world. That's not going to change. But also, we now know that energy systems need to be more secure, more resilient. Europe became far too reliant on Russian gas molecules, and that was a strategic mistake, a mistake that's now being rectified, and the energy transition environment is just such an important part of that. So we're looking at opportunities in energy from waste, in biofuels, in networks, and in storage. The second area that I think is really interesting as an investment focus in 2026 in the infrastructure space is around circular economy, around resource efficiency, around waste treatment, around recycling, and taking advantage of the very positive circularity that you can get by owning an infrastructure asset that contributes in a societal way to reducing waste, but also earns investors a great rate of return.
And sticking with you, Graham, I mean, we can't look at 2026 without considering the 500 billion euro German infrastructure fund. It was announced last year, and it's something we have to keep an eye on. So what do you expect to happen this year, and where do you see PATRIZIA playing a role in really capitalising on this opportunity? Yeah,
and it's a huge opportunity, not just for investors. It's a huge opportunity for the German population, for communities, for Europe as a whole. And I think in 2026 we'll see three areas of development. The first is continuing to refine the strategies and priorities for the Special Fund for Infrastructure and Climate Neutrality. Secondly, I think we'll start to see specific allocations from that fund for projects consistent with those priorities. And thirdly, I think we'll see a development of frameworks to enhance the ability of the private sector to bring the expertise and capital that's needed. And I think it's in that area in particular where we at PATRIZIA can really add value and help Germany solve the issues that it's looking to solve, right? At PATRIZIA, we've been investing in the built environment in Germany for 40 years. And we're engaging now with governments in Germany about the best way to bring that experience to bear. The German government can't solve the infrastructure needs of Germany by itself. It needs people like us, like PATRIZIA, to help them with that. And I really think that's going to be an important focus for 2026.
Yeah, a development we will definitely keep a very close eye on as we move along this year. And And you mentioned quite a few times about the convergence of real estate and infrastructure, what we term as RE-Infra here at PATRIZIA. So how do you see that evolving in 2026?
I guess think of a data center. I think that's probably the obvious one. Does it sit, with Graham, myself, in terms of thinking about, actually, we should be agnostic. We should just take the opportunity. If it, for example, bringing power to land, to a piece of land with, say, an urban industrial or logistics asset on top of it, and being able to convert this to a higher value usage, that could be a real estate, planning play, a real estate play, but equally could be an infrastructure play. But by being together and thinking together, we're agnostic, and we can take advantages of the opportunities for our clients. I see another area where we often talk about smart cities, which is great. It's actually putting an infrastructure to be able to optimize the traffic light system, to be able to optimize the urban waste to energy, etc. Why not apply this to a building in the same way and plug the two together? So making a smart building and a smart city actually communicate and work together. That builds resilience and builds optimization of scarce resources. And there are multiple examples. We talked about solar panels on top of logistics. I think in retail, you could think of a big shopping center in a called medium-sized city as a piece of infrastructure. Yeah. And I've seen now in some of our disposals, when we created value, the types of buyers being more diverse. Instead of having pure real estate players, I see more infrastructure players come in here. And I'm sure you've seen the same thing in your area,
exactly.
To be able to capture those arbitrage opportunities.
No, exactly. And when we're talking about re-infra, we're not talking about creating a new asset class, right? What we're talking about is recognizing that the built environment is comprised of both real estate and infrastructure, and they go together. One doesn't work without the other. And the great advantage I think we have at PATRIZIA is that we do have the ability to look at any real asset opportunity from the perspective of both real estate and infrastructure, and how best we can combine that to maximize returns for our investors.
Just a final one before we sign off. So 2026, how are we feeling about it?
How do we feel about 2026? Well, I think it's hard not to look at 2026 and be excited about the opportunity set there. We are firmly within an upswing cycle for investing in real assets across both infrastructure and real estate. The pipeline of potential investments is very large, and we're seeing increasing investor interest in new commitments to investing in real assets. So it's very hard not to be positive.
I think the market in parts will accelerate. I'm very excited about our investment programs in the different, property types I mentioned, with strong convictions, living, industrial, repositioning offices, and just having that necessity retail as an integral part of a portfolio. We need to build resilience. I think that perma-crisis theme is just going to stay with us. We have to adapt, very much scenario thinking, and just use our strength and our ability and agility to move between asset classes and geographies to just build those portfolios. I'm very excited with the conversations we've had with investors over the last, call it 6 months. The tide has turned. It's now execution time.
So thank you, Mahdi. Thank you, Graham. And thank you for listening.
Thank you, Andrew.
You can watch us on YouTube, or you can even listen to the audio version wherever you listen to your podcasts. And don't forget to head over to our website, patrizia.ag, to learn more, and follow us on LinkedIn.